spooling, Charlie. Probability trading strategy? You're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Wow, Mike, I almost feel like starting off with Good Morning America, but we won't do that today. So what we will do, though, I'll just ask you a really quick question, folks, because today's episode, I think, is going to be one of the best ones we've ever had, and it's going to lead to 3 more episodes. But imagine you're in a trade, and with the way the market's doing right now, you won't have a hard time imagining this, and everything looks great, and then all of a sudden, pow, it starts to drop. You tell yourself, oh, it's just a pullback. I'll give it more time. And then it drops further. And now you're staring at the screen. Your heart is pounding. You're thinking, I can't take the loss. It'll come back, right? But it doesn't. And you know, what was a small loss turns into a huge loss and a total disaster, and it hurts. So how many of you have done this? Be honest. Drop a note in the comments to say, yep, I've done it. Just hold up your hands, sitting there in a bad trade, hoping for a miracle. So Mike, have you ever done that? Have you ever, had an opportunity to trade that way?
Of course. I think that most of us have. And you're absolutely right. It's painful to sit through. When you're in it, it feels like you're almost like a deer caught in the headlights. You're just kind of hoping that things turn around. You're looking for reasons for why a trade might turn around. You start scouring the news, and those kind of things tend to keep you in a hole. As the hole gets deeper, it's almost like quicksand.
Oh gosh, so, that's a good analogy. Great analogy.
How do we get out of that?
Yeah. It's like if you've ever been stuck in the mud. I mean, like here in Hawaii, they have what they call red dirt. It's volcanic dirt, but when it gets wet, it turns into just like really. I won't give you an analogy of what it's like. It's slicker than snot. Anyway, but. But you get stuck in it. You can't get out. And so I think that freezes, when the market starts to turn against you and you haven't got a plan or you don't know what you're going to do, it just freezes. We've all been there. We know. And thanks for the comment, Caleb. Yeah, he's been there. He's done that. And so Holly Springs, NC, huh? Welcome, my friend. And that's what today's all about. We're going to be talking about not only indicator strategies, perfect setups. They really don't matter. What we're going to be talking about today is what really is keeping traders from winning. Mike, you've done, you basically have the you have taken and you've gotten these emails from these various traders and all that kind of stuff. And when you shared that with me, I just went, it blew me away. But before we jump in, go ahead. Yeah, it blew me away. I went, wow, that is just raw information. And it was good.
Last week, I had a lot of conversations with people on X, on Instagram, on Stock Twits, just DMing each other back and forth, trying to figure out, well, what are people going through right now? Because as you know, the market's tanking. It's down even more today. The Nasdaq's down about another 3.5%, and it's down about 12% off of the highs, and that's just in about 3 weeks.
Yeah.
So people. I remember what that's like, and people get caught off guard. People struggle to either hold on to a trade, hoping that it's going to come back, or here's a bottom. Let's try to pick that bottom and enjoy the ride back up. And when the market is ultra volatile, like it's been, you tend to see these upside reversal, kind of like what happened on Friday.
Oh
And
yeah.
the market spiked down, then it closed at its high. And a lot of people will see that, get excited, jump the gun, buy in, and then you look Monday morning, and here we are.
Yeah, right on. I mean, Monday morning, here we are, and the market's continuing to fall. Yeah, the market, I call the market right now. It's kind of like has a hair trigger to the sell position, and people
Mm,
are really, really wanting to jump out of the trades and all that kind of stuff. I mean, clearly they're collecting, closing out things for profit taking. But I think we're getting past the profit taking stage to that it's digging, and a lot of damage is being done. That's going to take a while to work its way out. The big catalyst today is that when President Trump was asked about are we going into recession, he didn't say no, but what he did say is that whenever something new comes along, it takes a while for things to settle back out. True
mm.
statement, right? True statement. But
Yeah.
the market didn't react very well to it. So, hey, why don't you tell everybody about Mike Lamoth? What's your story, man? What's your
Yeah,
background?
sitting through markets like this, that's my story.
Okay.
Um, so, so I started trading back in '99 with almost like similar results, but back then I didn't know what I was doing. Back then, started in '99, bought the mutual funds. Those went up. I thought that I was a genius getting in at the at that point, and I closed my eyes and woke up in 2002 to 20% loss in my account, with the pros handling it for me with loads of diversification and holding those things for 3 years. And it's like, well, all the three things that they said that you're supposed to do didn't work. So that's
Ah,
when I knew that I needed something else. And it took me until 2011 to figure out what that something else was. And that something else was the way that William O'Neill taught us with CanSlim,
right on.
looking at growth stocks and finding high probability setups and cutting losses and learning how to take profits at the right time, when to
Yeah.
sit on your hands, all those kind of things. And that's what finally worked for me. How about you?
Yeah, it's very, very similar. I came into the market, oh gosh, first started trading back towards the end of the 1980s, 1980, 88, 89 timeframe. Also, what got me interested in the market, well, I've been interested in the market since I was a little kid. I love the stock market.
Mm,
Uh, and I was, but as a former naval aviator and an engineer in the Navy, I was just drawn to the technical side, the discipline and all that type of thing. However, I wasn't very disciplined when I first got started. I mean, it was kind of ugly because I was one, I was the one who would argue with the market. Basically,
mm,
I would, I would be looking for a system and looking for a process. Uh, but I was just, throwing things up against the wall to see if they stuck. At that particular time, I didn't know about things like Can Slim. I didn't know about things like Investor Business Daily. Um, but I knew by looking at the chart, okay, when the chart does this, okay, that's when I would probably need to take action and all that kind of stuff. And so, but
mm,
that started a lifetime of learning, education. I've taken enough courses that would qualify for probably either a master's or a doctorate in
mm.
trading stocks. Um, and so that's what got me started. But then the rough road was getting hammered because I didn't have a good plan. I wouldn't use stop losses. I would just sit there, doing the pray. Oh, dear God, if you will just let this position come back to where I bought it. That's
Mm.
where, I don't know if you've ever said that prayer.
Oh
Just give me
yeah,
back
yeah,
to
of
break.
course.
Just give me back to break even, and then when it gets back to break even, and sometimes they didn't come back. Sometimes, and I think one of the most one of the most humbling experiences ever was to have a position actually go to zero on
Wow.
me, actually go to zero. And so anyway, hey, hi, Steve Grant. How you doing? Good to see you out there. But that's what kind of, started working me. And, I know a lot of people say, hey, it takes 5 years, 5 years, or more to be, get really good with your system. Well, it took me 15. But in that time, I did the back testing. Developed a system that works, and I'm very thankful that that has been worked well over the last 14 years. Uh, and like yourself, I wanted to share that with other people. So of course, I wrote the
Mm,
book "Trade Your Way to Freedom," and then you've written a couple of wonderful books with Mara Wealth, and
mhm.
and uh, and the thing that I love about working with you, Mike, is how generous you are in sharing your knowledge with other traders, because you have a true care. You care about other people, hoping that they do well. And you leave nothing in the reserve when you share with people. So that's really cool about you.
Oh, yeah, I appreciate you saying those kind words, and I feel that you're very similar in that regard too. Listen, if we've gotten hurt and we figured out a way to not get hurt and then be prosperous, then I think that it's our job to
Oh yeah,
help other people, right?
yeah,
Like,
yeah.
what kind of a person are you if you know how to if you've done something, gotten hurt by it, and figured out how to not get hurt by it, and started to figure out how to do better? What kind of a person would you have to be to not help other people?
Oh yeah.
Right?
Without
Like I think that we're called to help, and that's why we're doing the show here. So what were some of the key things that we wanted to help people with today? I know that we've got a
well,
big list to
yeah,
go
we
through.
do. And basically, traders spend so much time hunting for the perfect strategy, but oftentimes strategy isn't the problem.
Mm,
It's it may be in the application, it may be in the mindset, and Mike and myself, we've been talking to traders just like you guys out there, and the biggest struggle they shared weren't about setups and indicators. I would have to say a lot of them wrap themselves up into habits, maybe bad
mm,
habits that they've developed. Um, and it was so it was all about execution, discipline, and emotion. So before
yeah.
we dive into those specific things, let's hear from you. What's the number one thing that messes up your trading? This is, give yourself an opportunity to lay it down there in the comment section. What's the number one thing that messes up your trading? And is it your heart? Is it your head?
Mm,
Or is it, what is it? So anyway, this is the first episode, Mike, of a four-part series that we're going to be basically doing to break down the real reasons traders fail, and
right.
how to finally break the cycle. So next week we will be talking about naming the five biggest trading pain points and challenges that traders have.
Mm,
We've taken a look, and we dove in and reviewed a lot of documentation out there, talked to various traders, and we feel that these five pain points and five challenges is something that, if you're not aware of them, they will come back up and bite you in the rear just when you think things are going really well. So, but first, hey, let's start with some real stories from real traders, and the problems they have. And so, one of the ones that really caught my attention, and I'm going to throw this back to back to you, is the risk management trap. Why we don't follow a plan, and risk management failures aren't about just bad stop loss placements or letting losses run. They're also about mindset and mechanics. So, what were some of the traders? Because you had something
yeah.
from Johan, Spella, and Tyler. They were basically letting you know what they were thinking.
Yeah. Well, let's start with Spella. So, it the problem that she had was she would be right on the trade initially, right? Like so, she had her set up. She knew what she was looking for. Trade would start to work in her favor, and then it would reverse, and then she would get stopped out or shaken out close to break even. Okay, fine. But then she would go back into the trade right away and then get shaken out again, this time at a little bit of a loss. And then
Yeah.
go back into it again, and then get shaken out for another small loss. And by the time you add up all the buying and the selling, she would come out with a net loss. But if she had
Yeah.
just stuck to the first trade and be done with it, she would have ended up in profit.
Okay.
So it actually reminded me quite a bit of a story in O'Neill's book, How to Make Money in Stocks. And one of the lessons in there, the lesson in there was that sometimes you will get shaken out of a trade. And what he would do is when he was shaken out, he would go back into it and even buy a little bit more. So
Okay.
when I'm comparing his story with Stella's story and even my own story, because I tried to do it O'Neill's way too, and I ended up feeling more like Spella than like like
Sure.
O'Neill, because
Yeah.
I would get chopped up too. And so the way that I started to deal with that question was more about, well, if I weren't in this trade to begin with, would I be buying here?
Mm.
Right? And
Okay.
so that's speaking to our own reasons for entering the trade to begin with. If you're buying it based off of just the technical setup, then if you're going to re-enter, then you should have a same strong A plus technical setup.
Okay. I
But
agree.
in my case and in Spella's case, the answer was no. So we should just be taking that first trade and sitting with it and enjoying the little bit of profit that we did have. In O'Neill's case, he dove deeper into the fundamentals to like not just find, well, what's a strong setup in a strong stock, but to find the actual leader. And here O'Neill was fantastic at that, finding the Walmart, well, when it was doing its run, or Pick and Save, I
Sure.
think it was, to find Apple and to be long Apple for its whole run, to be long Google for its whole run, and to
Right.
be leveraged in just those two names. So he was fantastic at finding the number one leader in the market at that time. So for him, it wasn't just about the technical, it was also deep understanding of the fundamental and the leader to be like, okay, I got shaken out, let me go back into this one because it's getting ready to go. So but we're both answering that question. If I weren't in this one already, would I be buying here? The
Yeah.
answer, depending on your system, process, whatever, will be different from person to person. And I think that that's the question that we need to answer. And that's the
Yeah.
question that ended up helping me, and that ended up being a light bulb moment for Spella too.
Yeah. And without a doubt, especially on the re-enter, uh, one of the questions I have, from a mechanical standpoint, is what what was her trading plan? What was her plan for taking profit? Because I know I run into a lot of traders where let's say they have a plan to take profit at 15%.
Mhm.
At the same time, the technicals on the charts are saying you're probably not going to get a 15% gain.
Mhm.
So let's say it runs up 8%. Well, what's your plan? I know we want to stick with the program of letting things play out. But
Right.
if in fact there was a resistance level that was at 8%, um, and you hit it, and then prices stall out, does a person go back? In their rules, do they have the ability to go in and say, okay, I hit a strong level of resistance. I will modify the trade so that well, one, get out at least break even, or maybe with a little bit of profit. So again, from the
Right.
mechanics standpoint, um, I just wanted, because it says she multiplied bad trades before finally following before finally following her system, and so maybe she had the system all laid out,
Mhm.
And so the challenge, part of the other challenge, because I run into that all the time also, and I think no matter how long a person's been trading, that that I won't call it a temptation, but it's
Mhm.
a reason why don't we follow the system to the T?
Mhm.
Why uh, maybe it's a human trait. I don't know if it's a good one or a bad one, but a human trait to think we're exceptions to the rules.
Oh, well, there lots to dig in there. Let's start with that last thing why do we not follow the the system of the process? Well, why do we deviate? It has to do with belief.
Hmm.
Well,
Okay.
what belief, trust. Well, we're in the middle of Lent. Why do people sin?
Okay.
Part of it is a broken human nature. Part of it is lack of trust.
Yeah. Yeah.
So if we don't let's bring it to for trading. If I don't trust the system, then I'm going to deviate from it.
Yeah.
Now, I might trust it a little bit to put on a trade, but if I fully believed in this thing, if I fully trusted that yes, if I execute this, I'm going to end up with this result, and I've done the research and I've studied and all that, then why would I go off the path?
Yeah. Yeah. Well,
Right?
I
I
mean,
might believe that you could do it.
yeah.
Somebody watching might believe that I could do it, but do they believe that they could do it?
Well, don't you also think that it's partly okay? It's trust in the system, but then it's also, what will build trust in the system? I think the
Great
habitual
question.
use, habitual use and practice of the system that develops the trust, but also you run into the other thing is, well, they don't trust the system, they don't trust themselves. They don't trust themselves to actually, and it may be a long litany of things. Well, I've never been good at following a system, or I've tried these kind of things before. And so some of the weight,
Sure.
I think sometimes
Confidence.
falls back into the lap of the person who basically is having the challenge.
Right, right. So there could be confidence issues. And so
Mm,
what is
yeah,
confidence? Confidence is just the memory of past success.
right,
So how do you get the memory of past success if you're new? Right? So it's almost like a catch 22, but it's not. So here's if you're brand new, here's how you get the memory of past success. You go and you do the back testing. And
right,
that might sound like a strange term to some people. It did to me for a long time. I thought that I needed to buy some software or something. No, like it's just go to the chart, go and replay the chart, go back in time. You could go back for in any of these platforms, go back to say, I don't know, 2020 on your
right,
favorite stock, and then go week by week, day by day, advancing this thing, how it moved. And then
yeah,
that's how you start to see how the patterns develop, how the price actually moves, and you'll start to understand, wow, this would have been a good time to be in. Oh, that actually looked like it was a good time, but it really wasn't. So I
yeah,
should have
yeah,
stayed out there,
yeah,
stayed out of the market on this one. We actually did that study, and we've been doing model book studies inside our accelerator program of model stocks.
right on.
We did one well with Netflix, and there were between 2022 and today, there were times that I would have traded it, five times
Yes,
total
yes,
for the entire move. And there were other periods where it looked good, but it's just like, yeah, you know what? That wasn't a strong setup. It actually uh, gapped up ahead of earnings, so you wouldn't buy it right before earnings,
right on,
things
right
like
on.
that. So it's knowing when to be in and knowing when to sit on your hands. Going and doing back testing is a way that people can really
Yeah.
strengthen their belief and build that confidence.
Without a doubt, and I call back testing simulating. I want to go
Mm,
simulate the trades, and I do that primarily because of my aviation background. Is that did you know that for every hour we flew in the airplane, we had to simulate about 10 hours?
really? Wow, I didn't know
Yeah.
that.
Yes, a lot of times you do your yearly requalifications, if you can't go out and fly the airplane, they do the yearly requalifications for your instruments and all that kind of stuff in a simulator.
Mm,
And so that's why I agree with you wholeheartedly. Because I have a lot of traders saying, "Oh well, I want to be trading real money because then I get the emotional connection," and I want to just say that's unadulterated BS.
mm,
And it is. I mean, because what a stupid idea that I have to be trading real money to really feel it and have the emotion when at that particular point in time you're not ready for the feeling part. This is the
mm.
mechanical place in here. But you had some other guys who talked also. Johan says that he knows his system, but hesitates and misses opportunities. What's up with that?
Yeah. So his problem had to do with hesitation, and it's lack that part of that had to do with that lack of confidence in the system and lack of confidence in his ability to execute the system. So, and even a part of it that had to do with money, right? So, lack of confidence. I need this trade to work. I've got money. I want to grow the money, and I know that this stuff works. I read it in a book. I've been watching videos.
Yeah.
I've been watching my YouTube channel and on Instagram. He saw a bunch of my Instagram stuff. So he knows that this stuff works, but lacked the confidence to go and to be able to do some of it himself because a lack of experience,
Yeah.
right?
Yeah.
Lack of confidence. So for him, what he has to do is exactly what we spoke about earlier, right? Let's start to do some of that back testing or how you call it, the flight simulation.
Yeah, exactly. Yeah. So yeah, and one of the things that I also do is that I want to remove myself, and this is one thing we offer with AutoPilot trading premium services. Is I send out a pre-flight checklist every week that has like 5 stocks and then there's 7 of the leverage ETFs that we trade, and I send it out with the setups so that people can put in their who want to trade parallel trade with us. They can put in a
Mhm,
conditional order and and based on the technicals of where we think the prices are going to go, um, and in my 30 years of doing technical analysis, I laid the orders in, and then the orders are put in such a way that they identify a buy zone,
mhm,
and then that automatically, if that is filled in the buy zone, it automatically puts in the stop loss and the
mhm,
profit targets as the other part of the rest of the trade. So what does it do? Guess what? If somebody will just follow the simple system of automatically, the automation of putting these trades on Thinkorswim platform, which that's all automated for us also.
mhm,
It removes this hesitation and missed opportunities because it's just a part of the process, a habit that they've developed in putting in the trades, and it works exceptionally well. And
mhm.
so, and then what about Tyler? Adjusting basically, oh man, I am so related with what Tyler said here is that, knowing where to, set stops. He knows where to set the stops, but then he keeps adjusting them instead of taking the loss. I mean, I used to once I started using
Mhm.
stops for real, I was so guilty of that. I'd watch the price action get down to a certain point, and it's like, let's say I'm a nickel away from the stop loss, and I go, well, it looks like it's going to turn around, so I'll give it a little bit more room, and I would
Right.
go in and change my stops. And the way I got through that was once I set a stop, the only time I change that stop is to move it up, not down.
Yeah.
And in
Yeah,
other,
exactly. And that's a great way to do it too. Um, here's another couple of things, right? So I definitely agree with what you're saying, especially when people are brand new. You have your stop. The only place that you're going to move your stop is up, especially
Yeah,
when you're brand new. Later on, well, when you have a few years of experience under your belt and you're doing well, then if say price gaps below your stop,
sure.
an advanced tactic might be, okay, that's already a sunk cost. So where is the next level of support? Because price might be able to either test that or rebound or do something. So in that case, maybe you hold out a little bit more because again, sunk cost gapping down against you, that you can't do anything about that. But if you're brand new, if you've been struggling, if you're intermediate, you're just getting used to following these rules, yeah, cut that out and take the loss,
Yeah,
and that's it.
yeah. And I think covering the first part there, uh, or is it um,
Spell it?
Spela?
Yeah.
Uh, that you said for her is to basically define what's going to get you back into the trade. You know, define what your setup is and all that kind of stuff, and
Oh,
make
sure.
that
She
kind.
already had that.
Yeah, and so I mean that works well for this part also is recognizing that because part of it's so crazy. I know people who basically say, "Hey, I don't use stop losses," this, and they have this really strong belief. Is I don't know if it's ego or what, but they have this strong belief that uh, this stock is going to continue to go up forever. Okay, and so what do? They love Tesla. They love Tesla. They think it's the best company in all the world. They're in love with Elon Musk. Blah 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 blah. Right, and so they have no plan. They're okay with Tesla rolling over and diving over 50%. And
Mhm.
they fail to recognize, well, geez, if I would have just got out with a 25% loss, oh, I can now wait for maybe it's going to drop 75%.
Mm.
It wouldn't that be to to my way of thinking, I want to buy at wholesale. I want to buy at a discount and then write it back up. And but they have no plan for taking profits. They have no plan for. They just basically just the buy and holders. And I don't know if buy and holders it's an issue of ego or just laziness in not wanting to develop a proper plan and a proper system that protects their capital because
Mm.
you know what I'm saying? And we know 'em. I mean, typically
Well, whether
technical
you're a
analysis.
buy and holder or a swing trader or a day trader, whatever kind of, if you're participating in the market, you've got to have some kind of a plan. Well, whatever that plan is, and
Yeah.
the way that you're going to develop uh, confidence in that plan is by doing the simulation, doing the back testing to make sure that, hey, this actually works. So let's say that you are a buy and holder, that
Yeah.
you know what, like you better have a great way to figure out that this is the stock that's worth buying and holding. And
Oh,
well,
sure.
how much of it am I going to buy and hold? Am I
Yeah.
going to add to this thing at all? Am I going to take profits somewhere? How much am I willing to let it fall? Am I willing to let it go to zero? And if I am, well, how much of my account is in this thing? Right? Because there's a
Oh,
big
exactly.
difference if I've got my whole account in this thing or if I've got 5% of my account in this thing.
Oh, yeah. Yeah. And so, yeah, I was helping a particular trader out, and he would show me, his portfolio and all that kind of stuff. And uh, while he recovered a lot of his mistakes last year, nice
Mhm.
move. Almost everybody recovered a lot last year. Uh, he still went through a somewhere between a 50 and a 60% uh, uh, drop of the value of his portfolio, and he was in a seven-figure portfolio, right? And it dropped down into just six figures. Uh, it was cut in half. It was cut in half. And I'm sorry, but my pain threshold. And when I saw what he had done, he had really great buy points, but literally stepped in and says, "Hey, I know this is going to work out forever, and so I'm not going to take any stop losses. We just let it cook off." And so some of their favorite holdings was Tesla, NVDA, and all that kind of stuff. And NVDA, like in NVDA right now,
Hmm.
while he had like over 1,000% gain in NVDA from whenever he bought it, well,
Hmm.
right now, NVDA from a technical standpoint is dead money. I mean, it's
Hmm.
doing nothing or it's falling out of the sky. But anyway, hey, revenge trading and impulsive decisions, moving
Hmm.
right along. So,
Yeah.
one of the biggest reasons traders don't follow their plan, they fall into into common pain points, and that's what we're going to be covering next week, and other challenges. So, losing money hurts. Trying to make it back quickly only makes it worse. And so, what were some of the things that the people who were you were chatting with? What were some of the things that they were talking about regarding this?
Regarding revenge trading, yeah. So I think that when you're shaken out of a trade and you try to get back into it and get back into it again, and you keep on getting shaken out, that's something that can fall into the category of revenge trading if it's not part of your plan to get back in. So for me, right? Well, when I was doing it, also when Spella was doing it, well, we didn't have since we're buying breakouts and trading setups and those sort of things. We should always be looking for, is this a high quality setup? Yes or
Mm,
no? And if it is, great, try it again. If it's not, on to the next one. So if in the scenario where it's like, oh, well, I was just shaken out of it. Hey, it's starting to move back in my favor. If that's not a strong setup, if that's not my A plus setup, then and I trade that, then that's a form of revenge trading.
okay, yeah, right on.
Whereas for O'Neill, it wouldn't have been same. It might even be the same stock. But
Yeah,
the
yeah,
what makes the difference between it being a revenge trade versus it being part of your system is exactly that. It's part of your system to get back in. Awesome. Then go for it. It's not part of your system. Then it's categorized as a revenge trade and you shouldn't be doing it.
yeah,
How do you know if you want it to be in your system? You go and you do the simulations and you start to figure out yourself. Well,
yeah,
when should I
yeah,
be getting in? When should I be getting out? And have you could build part of your system to say, well, what constitutes a reentry?
right
That's
on,
a very
right on.
important part of it.
Right on. And I think part of the thing on that reentry, or even the first, you talk about, A plus setups and lower quality setups, is recognizing that. And I think part of that is also, I know you like to do it. I like to do it. Is the multi-time frame analysis,
Oh
and
yeah, that's a big one.
oftentimes the multi-time frame analysis will reveal to a person who, if they know how to do that. And I don't know if you did you do a video over on multi-time frame over on your YouTube channel? Uh,
Yeah. Well, we actually have a small video course that
okay.
walks people through how to do that.
And so, but with that, oftentimes a person may be trading off of let's say the daily chart, and everything
Mm.
looks like it's ready to turn around and all that kind of stuff. And you've got a daily momentum shift back up to the upside off of questionable support. And what you'll find if you and you jump in the trade, it runs up a ways, rally attempt, and then fails. What I find is that by failing to do a multi uh, uh, time frame analysis, if they would have looked at the weekly chart was still very negative and bearish, and so it's like fighting a hidden current that's going to
Mm.
hold you up from being able to jump on board and move that up to the upside. And it's like I said, it's like fighting a hidden current. But if one would take a look at the weekly charts, they would be saying, "Oh, I need to wait," especially if they're stopped out once on the trade. We had a series of those earlier this year, and especially February. February was a really challenging month. Well, when we got in and did the review and reflect portion, to check the trades out, what was discovered is that the momentum on the weekly charts and monthly charts was still heading down, and therefore it was saying, okay, in this market condition, now we need to wait for the weekly charts to momentum to turn back around, and that will give us our clue on when we can enter a trade. So what about Johan, who says he has a pressure to prove himself, which leads to bad trades?
Yeah. So, and by the way, I just dropped the link for the multi-time frame analysis course. And since we mentioned that, I just put it into the chat for people if they wanted to go take a look at that. But
awesome.
For Johan, feeling the pressure to prove himself, leading to bad trades. If you're feeling that you need to prove yourself, and the way that you're going to prove yourself is by a trade working out, it's like it would be as if you're judging your success by the scoreboard, right? Like you're playing a basketball game, you're judging yourself by the scoreboard. And you know what? To a certain degree, it makes sense. If you're putting up big numbers, then
sure,
I'm doing well. If I'm not putting up big numbers, then something's wrong. I'm looking at my P&L. The P&L is going the wrong way, then I'm going to judge myself based off of that. So what's the point here? If we make individual trades the decision of, well, I'm a good trader, I'm not a good trader, then that's the problem. What we want to do is not look at one trade, we want to look at a bulk of trades. And each individual trade has to be executed in the way that our plan tells us, the way that the process, system, whatever you want to call it. If you're consistently executing, then you'll have consistent results.
Yeah.
So, well, we've got to focus on the execution. That's the important thing.
Yeah. One of the things I found, Mike, you're absolutely right. Following the system, following and getting rid of that impulsive and compulsiveness in the trading can be a really challenge. So the one thing I recognize that, at least I found it in my trading this way, is that when I fail to use a stop loss, put it in place, let it work its way out, that Murphy's Law of trading is that if I fail to use a stop loss, the pain threshold, as the price continued to fall, the pain threshold where I had an uncanny ability to when I finally would say, okay, enough is enough, it hurts too much, and I would put in and sell out of the position, would be almost the exact moment the market would turn around. And you have to be careful with that, because then you can say, well, see, I told you should have held on to it. And so you have to quiet those voices in your head. But if I would have sold out at my regular stop loss, let's say 5%, then it continued to fall another 10, 11, 12, 15, 20%, then yeah, I would have had all that extra capital to go back into the position and that type of thing. So
well, what else? Well, when so like, let's say that the person A is sitting with that loss for 10, 15, 20%, 30%, 50%. That person is watching that every day as it's going down. The person that sold that took the 5% stop loss, you're probably not looking at that stock again for a little while, or you're at least not thinking about it actively. So that's how, like that. That's kind of the thing there, where if it, it's so subtle, where the first person is watching it every single day, then they sell out at the bottom, and I should have held on just a little bit more, and it turns around, versus the person that sold that at the 5%, took the stop, that they're not having those kind of thoughts, because they're already beyond that and on to the next trade.
Exactly. Yeah. Yeah.
So there's
And
a
I,
certain thing where we've got to learn to let go.
yeah.
Learning to let go is a
Hey,
very important skill, important mindset.
yeah, we could write a song about that, Let it go. No. Isn't
Yeah,
that,
Elsa.
there you go. Which reminds me of a good buddy of mine. He was taking his granddaughter to school, and she forgot to go tinkle before she left home to go to school. And they get to the place where he dropped her off at school, and she's going, "I really got to go, Papa." And just about that time, on the radio, the music from the song from that musical came on,
Yeah,
"Let It
yeah.
Go," and he was going, "No, no, no, don't let it go yet." But anyway, that's has nothing to do other than no, it is. I think it, I tell you that story because again, sometimes you just got to learn how to let it go. So, what about the actual aspect? And this is a big, I think this is a really big issue. Is the pressure to make trading work now? I think that pressure, that mindset that sets up, can one basically, people can destroy their accounts because they bet too big and they don't have a plan. But they come in. Let's say they come in with $100,000 and they go, "Yep, I'm gonna basically replace my income." And so let's say their yearly income is $100,000. Well, if you
Mhm.
only have $100,000 to trade with, that means you got to get a 100% return to replace your income. 100% return is exceptionally hard to do on a repeatable process on a yearly basis.
Right.
You may, if you are trading a good swing trading system, that's proven. The target return on those is somewhere between 35 and 40%, according to Dr. Thomas Carr. Uh, and so
Mhm.
that's kind of a metric I use. How am I doing with regard 35 to 40%? And
Mhm.
and even with that being my benchmark, sometimes I miss it low, sometimes I miss it high. Uh, but if I had the pressure of having to make, who's it, Patrick? Oh gosh, on the gentleman on X, Patrick, what's his name? Last name? He was on the show
Walker?
once. Yeah,
Pat
Pat
Walker?
Walker. Yeah, he's got a tremendous story about how he, fed his family of six, and all he had was the income from trading. Now we don't know the smoothness of that income from trading. I can only imagine
Mm.
what that would be, but traders feel like they should be successful by now, and that pressure leads to force trades. And so um, Johan was basically saying he wants to quit his job, hear that a lot, but feels he has to make it work fast. And I'd almost want to say replace the F word with make it work first.
Mm.
You know what I'm saying? And I encourage people to say, "All right, yeah, I get it. You want to, but my challenge to them is replace your salary first and make that a routine before you actually say, okay, I'm out of here. Because one, it does a couple of things. One, it sets a person up for repeatability, and it conditions their mind as, okay, I can do this. Okay, I've done this and I can do it again.
Mhm.
And it conditions because the uh, it enhances and blows up their mindset so they can accept the reality of, hey, I'm making $100,000 trading, in a year, which that's a big, huge step for people. But maybe 50,000 is just a huge step for people. First, but you earn your size. You have
Mhm.
to start off with
Right.
making maybe $500 a month. Then it's $1,000 a month. You earn your size and grow. So
Mhm.
so what do you tell people who want to quit their job and start trading for a living?
Yeah. Yeah, I think that you hit on a few good points there earlier. that how much money do you need, and what percentage gain is relative to that. So if you're making 100,000 or want to make $100,000 in a year, and if you need 100% gain to do that, that might not be realistic every single year. Some years, sure, there have been years where I've made 300% in a year. That and that's doable, right?
Yeah.
But that's not going to be doable every single year. There will be some years where you might even be down on the year, and that's just part of your system. Where a year where you're treading water, right? Like you might be dramatically outperforming the market right now, right? Well, with the Nasdaq being down 12% in the last 3 weeks, if you're as flat, you're outperforming. But is that putting food on your table?
Oh yeah,
So
exactly.
so part of it has to be, well, do I have a system for those dry spells, right? How am
Exactly.
I going to
Yeah.
manage those? The way that I've managed my trading is to think of it, well, it's like having a farm, right? And well,
Okay.
what's the harvest going to be? Do I have enough harvest to not just allow me to eat during the spring and the summer when it's the growing season, but to also allow me to eat during the winter, well, when
Yeah.
it's when things aren't growing.
Yeah.
And so that takes it a little bit beyond just the buying and selling of stocks. This is the money management, the budgeting part for personal
Yeah.
finance.
Yeah. Yeah. One of the best money management aspect of this, I heard from on this. I heard from John Carter. You familiar with John Carter? Uh, he basically does some really good option trades and this type of thing. And what he does is, again, he suggests how to earn your size. And he goes, if you have a $2,000 account, grow it to 4,000. And once you
Mm,
hit 4,000, celebrate by not taking half of it, but you may say you're going to pay yourself $1,000,
mm,
right? So you take that $1,000, take it totally out of your brokerage account, and put
mm,
it into your bank account. Do whatever you're going to do with that. Then you take that 3,000 and you double it.
mm,
And then you take the same percentage. Let's say your percentage you're going to take out is, like an example I used, I think it was 25%. You take
mm,
25% of what you've doubled, from 3 to 6, take 25% of that, stick that, take that out of your brokerage account so you're not playing with that money anymore, and you put it in the
mm,
bank, whatever. Maybe you're saving for a new car and a down payment
mm,
on a house. Uh, and then do it again and again and again and again, where you're paying yourself, but you're paying yourself less than what you're making because you're
okay.
still growing. You're still growing your account, and so I love that concept, and it helps. I think helps shake out some of the uh, it helps shake out that concept of one time because you don't know how long it's going to take you to double an account from 2,000 to 4,000. It may
Mm,
take it may take a month, it may take 6 months, it may take a year. Depends on your process and your system, right?
mm.
So that's a thought. And so so what about the extreme where somebody comes up and they've got $2,000 and they think that they're going to be and they say, well, I want to make $1 million this year. So how do you coach that person, Mike?
Well, the first thing, uh, understand why they want to do that, right? Or
Yeah,
understand, well, why do they want to do that? Why do they think that's possible, to take 2 grand and turn it into 1 million inside the span of a year? Well, so why do they want to do it? Why do they think it's possible? And why do they think that they're capable?
yeah,
Right? Because it's digging into those kinds of questions first, rather than just me putting my own bias on them and being like, "Oh, what's wrong with you? That's impossible." Like I don't want to tell people that, because
yeah,
you know what? If maybe this is somebody that's Oh yeah, well, I want to do that because I've already won a few U.S. investing championships, and I'm giving myself this challenge, and I have this strategy that I've tested, and I've leveraged it not just with leveraged ETFs, but I'm also trading options on top of those leveraged ETFs, and I actually think that I've got a good shot at turning this 2 grand into a million. Well, wouldn't I have egg on my face if I just made a whole bunch of assumptions about this person? So
Yeah,
let's dig in a little bit into their why and why they think that it's possible and how they're going to make those
I
kinds of
love it.
things happen.
Yeah. So basically that is so wise to be, and I'm write that down to remember that because I tend to be a little bit more in your face,
Mhm.
I'll go, what are you thinking? You're not gonna, you know, we made $2,000 into a million in a year. You know how hard that's gonna be. But I love what you're digging in a little bit deeper into the psyche of why a person wants to do that. So
Right.
it seemed
And
like
most people are probably going to fall into the camp of, well, I saw this guy on YouTube that said that if I just paid 10 grand for his course, that
yeah,
I'd learn how to do this, and I'd be able
yeah,
to do it overnight. And sure, I not working anymore for the man and having a the big mansion, those right like that. That's where those conversations generally end up, but it's still good for them to come to that realization on their own versus you know
yeah. No, I get it. And so, the other part that people have a struggle with is basically trusting. We've touched on this a little bit. Let's dig a little bit deeper into it in the time we have left. Is that
mm,
trusting the system? Why traders doubt their own strategies? Many traders have a system that works. Okay.
mhm.
But for whatever reason, they don't trust it. And we see the three cases here: Johann, Tyler, and Spella, explaining, some of the challenges they have, the real life examples here. So, what did they have to say about this aspect of trusting their system and trusting themselves?
Well, it's a little bit different for each person. And so that's why step one is to ask questions, understand them better, understand the situation better, understand the relationship with between them, the money, them, their system, and them and their ability to execute these things. That's why it's important to understand all that before making any sort of recommendations for how they're going to uh, overcome these kinds of things. So, um, if you know your plan and you hesitate, it could be so many different things, right? Like, here's a personal example, because yeah, I like to I want to start outing people, but when I thought that I had a system when I first picked up O'Neill's book, right? Like, I've got a system. It's right here in the
Yeah.
book. Is it my
Right.
system yet? Well, I have a system that works if I follow this, but is it really mine? Do I have I done the work to understand those things? Well, at first, no. So there's that part of the learning curve. Then later on,
Okay.
when you're starting to struggle a little bit with application, like I knew it better, but applying it and making it work, my ability to make it work, I had to dig a little bit deeper into my own beliefs of, well, am I comfortable sitting through this drawdown? I might understand that that worked for O'Neill, but I might have a certain attachment to money or a certain attachment to drawdowns or self confidence or belief that sure, I understand that some stocks can drop and consolidate and then go back up, but did I pick the right one?
Yeah.
Right?
Yeah.
Because maybe O'Neill's a better stock picker than I am. So there's those kinds of things to have to work out. But I didn't understand to even ask myself those kinds of things until I started to learn from guys like Mark Douglas and guys like
Right.
Van Tharp of the types of questions to self-reflect on to get you to those answers. And
Okay.
then uh, knowing yourself, knowing your system, And digging in that way, I think it is a big part of the path to profitability, long-term
Yeah.
profitability.
And I agree with that. And one of the things that I think is important from the aspect of that, and I picked this up um, from James Clear on his with his Atomic Habits, is
Hmm.
that one, we want to build our habits one at a time. And
Hmm.
so, what are the habits what's the one main habit you could start, a trader could start right now that would help them to trust themselves and trust their system. Okay.
Hmm. Right,
That's
right.
one. Secondly, is in part of that is have points along the way, like weekly, have maybe even daily, but at least weekly, have a time to review and reflect and ask yourself 3 or 4 simple questions. What
Yeah.
went right this week? What went wrong? And be honest with yourself. If you fail to use your stop losses, or you had a hesitation to get in, okay, that's part of what went wrong. But what went right? What went wrong? What did you learn?
Mm.
And lastly, what action will you take based on what you learn that will make you a better trader? Uh, I saw somebody, Alan, the guy, Alan, who was on our on the episode, one of our episodes earlier on. Really great guy, but he made the comments about, what one bad habit with your trading would you uh, uh, do you need to fix with
Hmm.
regarding trading? And I responded back to him. I said, Alan, I think we need to expand this. Is not just what, because sometimes a bad habit is not necessarily related with trading, but it's just a life bad habit. What
Hmm.
one life bad habit do you have that needs to be fixed? Because how you do anything is how we tend to do everything.
Hmm.
And so becoming a master trader, for me, it's in the reps, in the number of trades a person has done. I want to get that done as quickly as possible. 400 trades. They can be simulated trades. They don't have to be live trades. But to grow into it, so that's the reps. But once I've become a master, it still takes time to stay a master.
Oh,
Because
sure.
because yeah, like anything else, if you're exercising and you stop exercising, your muscles are going to atrophy, right?
Yep.
And so when I take that idea and that concept of developing those habits that I need to have, uh, because what happens if the thing that's impacting your trading is not so much the habits you have with trading, but it's you have a habit of not getting enough sleep at night, so you're not at your best. So
Mm.
you're prone to make mistakes. And so making those connections, connecting those dots. And then I suggest to people that one of the ways to address almost everything we talked about today is start off with simulating trades for at least 400 trades. Secondly, then jump to during the first, and this is within the first, I would say at least 90 to 180 days of when you're
Hmm.
learning how to trade. Then jump to doing paper trades,
Okay.
and and because the beauty about paper trading is, and especially if you're trading an account like the Thinkorswim account, the beauty about it is it adds a little bit more emotion to it. So you're feeling it, but you're actually having to practice the process. Do I get filled? Don't I get filled? That kind of stuff with the trades. And you can set them up exactly like you'll be trading live. But anyway, do that for 3 to 6 months.
Hmm.
Then that's when you step in and start trading real money, but not yet at full positions. Go in and trade quarter size, half size, and then you earn size going forward. So that's one of the suggestions I make to people, because people are in such a hurry to make it work
Sure.
that they basically they it's like they're in such a hurry to make it work. The quality of the foundation that they're building for their trading is very weak. They're
Yeah.
building their trading on the sand, not on the rock.
So, well, one thing that I like to add to that is that you're absolutely right. If you want to go fast, go alone. If you want to go far, go with others.
Right
And
on.
so, if people want to learn how to trade and how to do this, get yourself a coach, get yourself a mentor, because that's what's really going to shorten your learning curve. And that's why Dennis and I are here doing the show and doing the other things that we're doing between books and programs and all this stuff.
Yep, without a doubt. And Mike, and again, as you say, get yourself a mentor. And the thing about it is to get a really good mentor, guys. You're not going to get it for cheap. I mean, it basically, how much do you pay for a master, a college education? How much pay for extra education? It's part of the thing. So, hey, just a real quick recap on this week. That's thing I want to say about that is that both Mike and I are excellent, and we've got the experience, and we're excellent mentors, and we want to basically help you avoid the landmines that we already stepped on. So there's no reason for you to lose your legs because we know where the landmines are located. So, hey, these struggles, they're real, but they're also fixable. You just have to recognize them and take action. And today's episode hits you in some way. Make sure you're subscribed to either on Spotify or the YouTube channels, to Mike's sessions. For me, you can reach me at autopilottraders.com. Mike, what's your website, Mike?
Yep, marawealth.com.
Yeah, and hit.
Wealth.
So if you get on those mailing lists, we'll be able to send you the notifications when we have some more of these. And and we want to hear from you. So drop a comment down below. Let us know what your biggest trading challenge is. We'll be reading and responding to you directly. So, Mike, that's it for today. What do you any last and finals for you?
Yeah, I think that like Dennis said, drop the comments. We read all the comments or whatever platform that you're listening or watching on. And we'll see you back here next week for part 2.
Yep. No, part 2 is we're going to dig into the 5 pain points and challenges that every trader has and how to fix them. So we'll just say aloha. God bless everybody.
God bless.
See you, Mike.